After a nice little sell-off last week, the market rallied incredibly hard going into the close on Friday. Riz and I are going to talk about how this is going to affect the market on a short trading week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. My name is Chris. I'm part of Riz International, and we are a group of traders who are looking to make our money work for us and not the other way around. And if that sounds appealing to you, make sure you get down there and you smash that like and subscribe button. Click the bell icon to get notified every time we upload another webinar here on the channel, because we want to help everyone become a better trader so that you can make money in the markets and achieve financial independence. And this week has been rather interesting. We had Powell talking this week, and that didn't seem to hurt the market at all, which in the past it kind of has. And actually on Friday we had a huge jump, pushed up out of our channel, and we're really kind of rallied into the close on this candle here, closing right around at 44.50, which, if you'll remember, last week we talked about this, and if you haven't seen last week's webinar, make sure you check it now. 44.50 is kind of our short-term resistance. Riz, obviously we're going into a short trading week with American Independence Day on the 4th of July. So yeah, to all my Americans out there, America. For the rest of us, obviously the markets will be closed on the 4th. What should we expect this week?
Yes, I will say, happy 4th of July to all our amazing American Elite members, and of course those of you watching on YouTube afterwards, because the next time we convene for an Elite webinar will be after the fact. Yep. So happy early 4th of July, and of course,
thank you.
Can't forget, happy Canada Day. Today is actually Canada Day. Today is actually nice. Canada Day, as they say. But sorry. That was cheesy. Chris, feel free to edit that out.
No, I don't know. That's a gem
keep
right
it,
there.
keep it.
Yeah, we gotta keep that.
But no, it's seriously awesome. Have a good weekend to everyone. But from a market standpoint, Chris, I guess the markets also want to celebrate this weekend because pretty much hit the highs of I think since last May. If you really look at it, we are in pretty much a 52-week high, and it continues to be going. So this channel breakout, as you mentioned earlier, Chris, that's very bullish from a technical standpoint, of course.
Oh yeah.
But from another angle, again, still technicals. If we look at the RSI, look at it come back up again. Now, the fact that the market is once again pushed up after the prior week's pullback, that's even extra bullish. Regardless of what the RSI says, just price action alone, this pickup is even more bullish than what we were seeing back in the earlier June, right? So as we start the second half of the year, as we start Q3, and as we get into really the start of July, it's going to be interesting to see how high markets can go. There's no denying this has been a very, very bullish environment, especially the last month and a bit. And even if we go further back, it's pretty clear to see that we actually have been in an uptrend from October onwards, right? If you would have asked me that we could be in an uptrend in October, November, even heading into 2023, I would have didn't look like it exactly, right? But now when we look back, it does clearly, of course, because that's hindsight, right? Hindsight 2020. But ultimately, this is looking very strong. I am not quite ready to say, okay, to the moon type of thing. You know me, I'm not someone who's easily swayed by hype and euphoria. I'm usually a contrarian type of trader. My trading setups are usually contrarian as well. And that's, of course, served me well. So from a pure momentum style, this is obviously a very strong bullish indication. But from a contrarian standpoint, we have to be a little bit cautious. Doesn't mean we short, everything. It just means we have to be a little bit more patient. We have to give it a little bit more time. We have to be a little bit more selective. And when we do go long in things that are not too overextended or overvalued, even though they can still continue, like Apple, just hit $3 trillion market cap, first company to hit $3 trillion. And guess what? Look at that. It's a massive, massive rally. It's the entire year. And just when you think, okay, it's overbought, stays overbought for months. It stays overbought for months. It still gaps up on Friday, right? So it goes to show you a clear cut example, right? And I'm not looking back, at a few years. I'm looking back at just this year, and one of the biggest names, Apple, continues to run, but then of course gaps up still, even after the RSI is so overextended. So you can see firsthand that technical indicators, sure, they can help you, but they're not obviously 100%. They're not the end all be all.
Yeah, I think that's an important thing to remember. When you're looking at this, is I love putting the technicals on here just so we can kind of see it. But there are so many forces acting on the market that are independent of the technicals that don't give two flying farts about whether we're sitting on the top of a channel or not. And so it's important to keep abreast of those things, and that's why we do these webinars, to make sure that you're aware of it, so you have a better understanding of what's happening in the market and kind of what to expect moving forward. I have to kind of agree with Riz here. Obviously, it's a very bullish move, but yeah, there's a lot of different catalysts out there that could really push the market back down, or it could continue to run. The truth is, we just don't know, and we're doing the best we can with our analysis to make sure that we're keeping you up to date. Let's take a look here at the breakdown for the S&P 500 and see what's pushing it up. And, well, it's more of the same, guys. If you saw last week's webinar, we talked about this then. Tech just running high, up over 41% on the year so far. Communications absolutely crushing it, which, of course, is part of tech, up almost 34%. Consumer discretionary going up over almost 33% as well. S&P 500 up 15% so far, and then real estate starting to peak back up here, finally getting over the zero line, while everything else is still underperforming, currently below the zero line and below the S&P 500. So really having a hard time here with consumer staples, financials, healthcare, energy, utility. And but that being said, we did see a nice curl up on all of these going into Friday with that big gap up in the market. So all sectors are starting to push up higher. Riz, do you expect this to change? I mean, obviously, we just finished up Q2. Congratulations, you're halfway through the year. It feels like we just opened this, in January, a couple days ago. But yeah, here we are sitting on July 1st. The date of recording. Obviously, there are things that could affect the technology sector with AI. Of course, there's been a talk about doing a pause on AI development for ethical reasons. I don't think they're going to do that personally. I think there's way too much money in it. But are you expecting major changes in this spread going into Q3 and Q4?
Yeah, I don't think it's sustainable to keep running. Again, we have seen fast and furious rip your face off bull markets.
We saw it. It's Fast and Furious 10. That's the new one, right?
Yeah, that's right. That's right. But ultimately, I feel like, we could see a little bit more of a balance coming in Q3, Q4. How significant and exactly when, of course, is the $1 million question. But really, I think as more data comes out, we're going to see Powell finally, get to put his money where his mouth is, so to speak. And will he give another 2 potential rate hikes, as he mentioned in the past? We'll have to see. Will he not cut rates? Like you said, they have said, and he has specifically said, that they do not see themselves cutting rates this year. So that's going to be important. That's really going to be important. And of course, based on the way the markets run up and the way it's moving, the market does not believe him. I've said this many times before. The market does not believe Powell because he's lost all credibility, which is actually really bad. Because a market that's frothy, that keeps running, can effectively delay the inevitable and make it even worse, which is an economic slowdown. The economic slowdown is inevitable. The problem is we've just kept prolonging it because Powell has no backbone. They've been slow to react. The market doesn't believe them. The economy and the consumer remains to be quite resilient and continue to, um, you know, keep working, and the economy continues to keep chugging along. GDP continues to remain positive quarter over quarter. So I feel like, it hasn't been, I would say, a clean cut slowdown, and we do need that. We do need um, recessions, and I know it's like sounds like blasphemy, but it's an important part of any functioning um, capitalistic economy, because the further you delay the inevitable, which is a recession, the larger and more costlier and more significant it can become, right? So I would much rather we have a slowdown. I much rather we have a pullback economically. I much rather we have unemployment go up a little bit. And I know it sounds wrong, but it's needed, right? It's needed because otherwise, what do you have? You have an overcooked economy that at some point is going to stumble, and that little stumble turns out to be catastrophic. We don't want that, right? You're better off easing into it, so to speak. So it's looking like the latter, where we're just looking to prolong this thing, and at that point, it could be even worse when it does occur.
It's like taking off a Band-Aid. Sometimes you just got to rip it off and get it over with. And taking it off slowly is so much worse. If anybody has, had to do that, it's not a fun process. And so it's the same way in the market. Sometimes you just got to let it happen, rather, as opposed to keep kicking the can down the road. And I have to agree, it does seem like what they're doing at this point.
Absolutely.
All right, let's take a look here at some assets, and that being light crude oil and gold here. And so oil really is just not doing anything, guys. Talk about some major sideways trading on oil. We talked about this last week. Obviously, nothing has changed going into the 4th of July weekend. There was no major, push on oil either direction. Really just kind of hanging out here right around 68 and 73, 72.50-ish. Somewhere in that range seems to be where crude oil is selling per barrel at this time. But gold is sliding quite a bit. When we came up here and we nearly hit that all-time high on gold, we had a hard rejection from there, and really have pushed down even further this week. So gold taking a little bit of a hit, but nothing too significant. Riz, we've talked about sustainability with oil and a sustainable price point, and obviously this is really kind of where it's at. Of course, there are some parties that would like the price of oil to be a little bit higher so they could make a bit more profit. But do you expect oil to change much this summer, or should we expect more sideways trading unless we have some major catalyst?
Yeah, for now, I think we can expect some sideways action. This is a very long channel. It's not uncommon to see oil and even other commodities move channel and move sideways for many, many, many months. So this is one of those instances where, unless something drastically changes, which I don't see occurring this summer, I think it can continue to channel. We already do know OPEC's kind of reacting, but those things are a little bit lagging. They take some time in regards to production cuts to really see that come into demand impact, right? So I feel like we're okay with this channel for now. I don't personally see a setup long or short just yet, but that's just me. And from a gold standpoint, you're right. It's been like a sort of a trickle down, and I'm not surprised because at 2050, it was a bit frothy, and I know there's going to be people that are like gold bugs. They're like, okay, gold is the only asset that matters, and it's the only safe haven, and it's the only real thing, and yada yada. But ultimately, as economies continue to do well, and stock markets that continue to do well, gold is usually quite the lagging asset class. So I'm not quite surprised at all that it's coming down. Now, if we do see a sharp recessionary indicator, if we do see a sharp pullback in markets, we see these kinds of strong negative catalysts, then it might not be impossible to perceive gold picking up a bit, right? Because we have seen that actually this year under certain harsh economic data, we do see gold prices spike.
Yeah, it does happen from time to time, obviously, but yeah, with everybody, talking about all the economic stuff and be like, oh yeah, gold is the only thing that'll hold value. Well, so far that hasn't really come to fruition. Another thing that likes to hold value and is kind of continuing to run here are the 2-year Treasury bond yields. So really making a big push on the bond yields here these last couple weeks, actually since about the middle of May. And we did touch on this last week, but quite a split between these two here. The 2-year just running. Looks like we closed at 4.9% yield on those 2-year Treasury bonds. So quite a big push up there, while the let's see, the 30 and the 10-year are lagging quite a bit, right around 3.8%, both of them at this point. And the dollar came down a little bit, kind of coming into last week, and we've kind of been pushing up a little, slowly as far as the dollar is concerned with its, relative strength versus other currencies. So for me personally, I'm not seeing a whole lot of change from last week. But Riz, do you have any insights on this?
No, pretty standard for the course. I mean, like it's kind of a bit of a divergence that we're seeing 2-year Treasury yields spike up the past week. Usually, when we see markets recover, do well, we usually see sort of a tapering off in bond yields, but that does not seem to be the case for the 2-year. So we're kind of getting a sort of an imbalance here and a difference of opinion from the bond market as well as the equities market. So the equities market saying, hey, we're all good, no recession indicated, no hard landing. Whereas the bond market saying, you know what, it might be pretty risky still. We still got some risk. We still might have some rate hikes coming, and we could be in for a little bit of a slowdown in the economy. So two different views clearly that we can determine from two different markets.
No, it's a really good point. Obviously, people, more, favoring the short-term investment as opposed to the longer-term, investment on these bonds, which I find a bit interesting. But obviously, there's a lot of catalysts in the market. We'll talk about that in a second. If you're here on our live webinar, please go ahead and start posting your questions for Riz and myself. But listen, we all know you're here for Riz. But let's go ahead and take a look at the key dates this week. Now, remember, there is no trading on the 4th of July, so Tuesday the markets will be closed. Before then, on Monday, looks like we're getting the manufacturing PMI coming out. Looks like not a huge change from the previous month. However, on Wednesday, when the market opens up, we're going to have the FOMC minutes. So that should be interesting when those come out. And then we've got some, not huge numbers until we get to Friday. Balance of trade, services, job openings, not too spectacular, usually not moving the market too much in my experience. But one that usually does, the unemployment rate is going to be coming out on Friday. So that's going to be one you're going to want to keep an eye on for sure. With the week being split up like this, Riz, do you feel like, these catalysts might be a little less intense than they would be otherwise? Especially with everybody coming off the holiday and maybe hungover on the 5th. Do you think the FOMC minutes are going to be too harsh?
Yeah, so I think, we are probably going to see a little bit lower volume than usual this week. But of course, if there are some bombshells, if there are some unexpected releases in regards to what the market's anticipating, whether it's the non-farm payrolls, whether it's unemployment rate, or even, if something is said in the FOMC minutes, but I don't think anything's going to be said that's not expected. But if we do, then yeah, we can see markets still react. Again, although all things considered, it will be a lower volume trading week compared to any other regular week.
No, that's always been the case, honestly. When you're going into a holiday week or weekend, regardless, usually the day before and the day after are pretty weak in terms of volume. So I'll be honest, I think Monday is going to be kind of much of a non-day in the markets. But we'll wait and see. You never know what might happen out there. Again, and if something happens, if there's some headline hits or something along those lines, we definitely could see some big movement. But unless that happens, I'm expecting Monday and Wednesday to be pretty quiet, all things considered. So I see we have some of our people typing in their questions right now, but I want to touch on something with you, Riz. Obviously, AI is the big talk of the town right now in the markets, and it feels like anybody who says AI in their earnings report or something like that, it just goes nuts. How do you feel like this is kind of like almost a bubble like we've had before with let's see, there were the weed stocks back in the day. We had the blockchain stocks; those were always kind of memey. Of course, then there were the meme stocks, which will not be named here. But do you feel like this is kind of getting overblown? I mean, we look at stuff like Nvidia, and it's just going absolutely nuts. Obviously overextended at this point, but do you feel like this can maintain?
So this is an interesting one. With AI, it's a technology that's not it's not new just the last year. It's been there. It's just become more accessible. It's become more mainstream. It's become more in the face. Like people are aware of it now. So of course, it's not uncommon to see corporations take advantage of this and pivot this into their um, earning statement or even some of their products. So we did touch on this. I remember the last time how AI is impacted and can continue to impact uh, some future jobs, right? So jobs, whether it's um, administrative jobs, things that are more highly easily automated, uh, are at risk. But other than that, yes, there is a theory that it can increase corporate profits as an aggregate in the trillions, right? Again, these numbers usually always happen. I remember when wheat stocks were the thing. People were like, "Yeah, it is gonna be huge. It's gonna change the entire landscape of the weed marijuana industry, and as a result, because it's legalized, it's gonna change pretty much the economies of even states and even countries as a whole." We haven't seen that happen. We haven't seen that happen. In fact, Chris, bring up CGC, the love child, the poster boy of wheat stocks. Yes, ladies and gentlemen, that's 38 cents a share. Okay. So as Chris zooms out, shows you, if you would have thought and bought into 2020s, 2021 even, and yeah, weed is going to be the next frontier. Well, I mean, it's been nice losing 99% of your investment, right? Or if you were like me and you saw this stupidity occur back from the start of 2018, the same result would have happened, but just to a lesser extent, where people lost a ton of money in 2019 after the wheat stock boom, and then they lost a lot of money in 2021 post 2021 rally as well. So this is a similar chart for pretty much every wheat stock. Okay, I'm just showing you, Kisses has up CGC because it's really one of the biggest. It was the darling love child of any weed connoisseur in the market, so to speak. So this is just an example, right? And I could show this example for one hype bubble euphoric mess after another. Um, I'm not saying AI is going to be the same way, because AI is something that is actually, so to speak, I don't want to say tangible, but it's something that's, we could see the result, we could see the utility, we could see it actually start impacting, from on an individual level, from someone getting answers from it, someone using it for their studying, someone using it um, to draft certain documents that they would have had to get legal, lawyers involved. They just, it's, the implementation is there. It's now, is it actually overblown? Like, is it being coveted and said it's to be something it's not? That's the question. And I think the reality lies somewhere in between. I don't think it's as big a deal as people are making out to be just yet. Um, but I also don't think it's like one of those things like the blockchain where it's just no context, no usability, no utility. It's not one of those cases. So it's somewhere in the middle. But if I had to give you a clear answer, yeah, I think it's overblown. I think many of these companies that are talking about AI, and yeah, they might implement it, and yeah, it might increase their bottom line a bit, but it's not completely changing the way they do business. It's not completely changing the products and services that they're in. And even certain companies that are pure AI focused, like Chris, if you bring up the ticker AI, literally, obviously, look at this one, right? So it's not like this company didn't exist before ChatGPT and all that stuff started becoming mainstream. It did, but then it's had a massive resurgence, but it's still nowhere where it was. So it's had a great run up if you look at this year, um, with all the AI hype, but it's still down 80% from where it IPO'd, right? And even if we discount all that and we compare it to, let's do yearly. Let's see what it's up yearly, from the start of the year to now. 250%, right? But it was a $10 stock at the end of the year, right? So yeah, it's tripled, let's say, but it's not the end of the world when you consider the stock has lost 80% of its value even after this tripling. So again, many of these companies don't make money. Many of them are just sort of selling the fairy tale type of stocks, and we've seen that in crypto, blockchain. We've seen that in obviously weed stocks. We've seen that in pretty much everything, whether it's companies going bankrupt, even like the meme stock fiasco. So here we are. Everyone thought, oh, it's going to turn around, whether it's GameStop, whether it's AMC, yada yada. I feel like it's a way to make money for those that know how to play it. But other than that,
Yeah, that's for sure. Honestly, there's definitely a lot more to it than just, is it boom or bust or something like that. But yeah, I have to agree with you. I think that AI will make an impact in certain areas, but I'll tell you guys, for my day job, we do everything online. And the content creation aspect, especially that, even in writing, AI is, well, let's just say far behind my skills as a writer. Not that I'm, trying to toot my own horn here, but I've tried using ChatGPT and other AI bots to write, and it just doesn't even come close. So it's definitely here to stay, but I don't think that it's going to be, everything you read will be AI generated anytime soon. But you never know. I see somebody typing a question here. While he gets that posted in, all of our elite members know this, but we'll kind of clue the YouTube crowd in a little bit. We've been very paced with our trades this year, and this has been something that has been a little bit of a point of contention. And Riz, I'd love for you to explain, kind of why we're being a little more tactical with our trades this year, in this market. Because if we're looking at it now, I'd be like, oh, well, geez, Riz, back here in November, October, you should have been going long on everything and you've been made a killing. But obviously we weren't doing that. And so give people a little bit of understanding as to why you're taking it a little slower and being a little more reserved and holding onto your cash a little tighter.
Yeah. So as this market is very much determined by Fed speak, it's determined by catalysts, and those things change quarter to quarter, week to week, month to month. So it's easy to look at it just from a chart from the past, looking back, 7-8 months, and coming to that conclusion. But as we are going through it day to day, hour to hour, it's a whole different story. And we've seen markets not just make a straight vertical line upwards. We see that volatility in some points come back, and it'll hit like a resistance point. It'll get to a certain point and then puke. And we've also seen some massive post drop rallies, dip buying going on, and then we've seen some consolidations. Like we saw, pretty much April and May were overall consolidation months where the market didn't really go anywhere. So we have periods like that too, and those are primarily the very key periods where you don't get stuck in one direction or the other, because you could be in for quite a bit of pain if you're on the opposite side. Like if someone is loading up on long positions and buying everything in May and June with the consolidation, what if instead of what happened, which is go up, what if it tanked? Then you're screwed. You're stuck. You're effectively now faced with the choice: do you bag hold or do you actually cut risk and cut? So it's It's one or the other. So for me, I felt like, yeah, we have some pertinent long positions, we have some buys, but we're not going to the point where we're just buying everything. We're being more strategic, tactful, like you said, and yeah, maybe we leave some profits, but we're covering our bases. We're covering our sort of like, let's say, ammunition, so to speak. We're covering ourselves and protecting ourselves. We don't need to try and extract every single dollar out of every single stock. We don't need to do that. The primary goal is to protect capital, to make a positive risk-adjusted return. There's no point in betting the house and then making some money, because what's the opposite side of that scenario? You lose the house, and that's not something you want to do, or most people should do. So I much rather play it more calculatingly, play it more from a risk. I don't want to say risk averse, but from a more risk aware standpoint, and that's exactly what we've done. And even then, many of us, including myself, and done really well. Yes, because we've been a bit of a run up this past year, but also because we made sure we positioned correctly. So even during the low down, the dips that we see, low pullbacks that we see, whether it's the start of the year, whether it's in March, we take advantage of those, right? So it's definitely been an interesting year, but it's going to be quite the second half, because it'd be wrong to assume, because it's been a great first half, that the second half is going to be the same.
Absolutely. Never assume that a trend will always continue, because the market will tell you something different. All right, Nick got his question in. He wants us to take a look at Disney, saying, hey, it looks like we're consolidating here around 90 again. Actually, it looks like support is closer here towards 87, but close enough. He's wondering if this is discount for a long-term hold. The movies have been flopping, and just overall bad flat sentiment. I have to agree with you on that. The movies have been taking a bit of a hit here as of late, and I think that people are getting a little bit of superhero fatigue since they have been just churning out all the Marvel stuff, and it really hasn't captured that mystique that it had around Infinity War, if you ask me. But Riz, what are your thoughts on Disney? Is this a bargain buy, or should we stay away from this?
Yeah, I agree with what you said, and even what Nick said. There is definitely some not so good results from recent movies. I personally have not been a fan of the recent movies.
Yeah, me
And
neither.
of course, like you said, they haven't been up to the task or up to the par of previous movies, especially the superhero movies, like you said, the Marvel ones, the heavy hitters. But I feel like apart from that, and you nailed it, Chris, there is definitely some superhero fatigue. There's only so much plot holes and plot armor people can deal with, myself included.
Yeah.
Sorry to anyone who's a diehard superhero movies fan, but again, I feel like this isn't actually at that point where I feel like, oh, it's a bargain. It actually isn't a bargain, so to speak, from a technical standpoint. Yeah, it's at a key area, that key 89, 87 area, but I couldn't, in good faith, say it's like it's a discount to turn. So I feel like from a technical trade standpoint, from a swing trade, yeah, it might be something that we could be potentially good for a long, especially if we see the market run up. But look at the relative strength, like not RSI. I mean, relative strength compared to the market. The market's been tearing up. Everything's been tearing up. Apple's just been going vertical. But look at Disney. Not doing much. Like just the last week, look at them move sideways, whereas everything in their cat goes upwards. So it's something interesting. And Chris, give me that side eye right there. But it's so this is something you want to be careful of. When we see really, really weak relative strength, doesn't mean you don't trade it. It just means like, okay, well, clearly people are not enthusiastic about this stock in a rising market, right? So something to be aware of. I've been keeping an eye on it the past week, so it's interesting you mentioned it, Nick. But doesn't mean I figured, I don't want to go long just yet, because we have sort of a short trading week, and just like I said, very, very weak relative strength compared to the market.
I got to agree with you, Riz. I'm not a huge fan of this stock right now. If you look at what's been going on in the parks, they shut down the Galactic Star Cruiser or whatever, the immersive Star Wars experience. Of course, I think the price for that was what, like 2,000 a night or something like that. It was something ridiculous, but people just aren't buying into it right now. The movies have been terrible. I have to agree with you on that 100%. I have been rather ticked off lately, and Disney really needs to kind of find themselves, to take a line out of their movies, and kind of maybe let go some of these things that they've been doing. Jeff is asking the questions, any speculative short if the SPX rejects this level? So let's go back here. We were talking about that temporary or short-term resistance here around 44.50. Me personally, I don't know if I would be shorting into this, but Riz, how do you feel? Are you feeling frisky for a short?
Yeah, I don't want to give anything away. So it's not an elite, but yeah, Jeff, we have an inverse Nasdaq position. It's not anything crazy large, but it is there. We do have another short position, but yes, I could potentially consider shorting some of these frothy, overvalued things, but they would have to be very cut and dry. Meaning, if it continues to run, okay, we have to set a hard stop. We have to get out. It wouldn't be one of my classical situations, but we wait, we hang on, we stick with our thesis type of thing. So, am I eyeing certain ones? Yes. Do I have a list for you? No, simply because I don't want to have a bias. I don't want to just jump in just yet. I am gonna, of course, I share my watch list every Sunday. So obviously today's Saturday at the time of this live recording. So I will be sharing that watch list, and that will have longs and shorts. But I'm not going out there shorting anything else just yet than what we've already done the past week.
Great question. Thank you for that, Jeff and Nick. I'm not. Oh, wait here. Vito wants us to take a look at Tesla. I was about to say that we didn't have any other questions, but of course one came back in. So,
yeah, Vito. So, any more context around your question? Yeah, we can bring up Tesla, but what's your views on it? I could wax lyrical on Tesla, Elon for days, but to kind of maybe segue into it in regards to a setup, I think it's not something I'm comfortable taking long on. It's had a massive run up on pretty much no news. And another interesting thing is, if you were paying attention to Elon's statement on Twitter, he actually is tempering expectations for the next delivery numbers. And I'm not. I feel like because he said so much and he continues to say so much, I can't be like, okay, he's tempering expectations, that means the results could be bad. I can't, because we've seen him do that where he tempers expectations, but the results are actually good. So we have to be aware of that, but not solely trade based on that. But if it's any consolation, I feel like I am definitely eyeing this. I have been eyeing this since last week on this pickup. It was looking very bearish up until the start of the week. Of course, we had this run up, but that 280 is still a very strong resistance, and that kind of goes back to last year as well. Along with that, I feel like from my point of view, because there was next to no news on this massive run up from May, sorry. I feel like this is more of a short. If I had to lean in one direction, it would be more of a short. As far as naked calls, I see your question further to my question about Tesla. You're saying thinking of doing naked calls way out of the money weekly. Well, yes, I've done that, been there. It can work, definitely. Just be extra careful with earnings coming, in July next month. Also be aware that this thing moves big. It doesn't need a catalyst. It doesn't need, major news. It can just take off. But we've seen it before. It runs up really big, but it can also run down real quick. So if you are really far out of the money and on a week by week basis, you have a pretty good, solid chance of success there, because I've done it myself. Just so long as you cover yourself, you're careful, like you're not doing multiple contracts on a small account, and you have sort of a plan where you could potentially take delivery, or maybe short put it out to hedge yourself.
Yeah, definitely great advice. Michael came in. He says he has a few covered calls running on a dirty name here. I'll say it in a minute. PLTR. What's your opinion on direction for the stock? Let's take a look.
Another AI boom on this one. Pretty much vertical post earnings. If I had to lead one way or another, bearish. But of course, that's me. I might be biased. But I feel like if you have some covered calls running on it, and I assume that are they in profit? Again, I don't know if they're in profit. It's definitely run up with the market this week, but it's not a very confidence inspiring trade from a technical standpoint to go long. If you are already in, like you said, you have covered calls on it, depending on where the strike is, you might need to manage that because they could easily expire worthless, but you're going to be stuck with the stock. So you're in profit. So you got to decide. I wouldn't close down covered calls. I'd let them do its thing, but perhaps consider if you really want to take profits, get out. Consider doing the covered calls at a lower strike. Like you just said, now you have another running at 17 for July 17. So that's still over 2 weeks out, and it's 17 is that top resistance as Chris already has lined up there. I would definitely consider putting that down a bit, maybe bring it to 16, and then keep doing it that way. But for the 17 one you have, just let it do its thing.
Awesome advice. Great stuff. I want to thank everybody for coming out tonight. Really appreciate it. Obviously, remember, and I know I've said this several times, markets closed on Tuesday, guys, for the 4th of July holiday. Go enjoy the rest of your weekend. As I always like to say, be safe. Don't do anything I wouldn't do, and that gives you a lot of leeway. And just enjoy yourself. It's beautiful out this weekend, at least where I'm at. I think it's been okay up there in Canada. I hope you're not getting smoked out, Riz. But for the most part, enjoy the weather, enjoy being outside, and just be glad that we live in a world where we can talk about trading markets and we don't have to focus on other things. So
Yeah.
have a great weekend, everyone.
Fantastic. Take care. Ciao.